please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Bernstein's Venugopal Garre has come out with a magnum opus. I mean, he's calling it a black book on the Indian consumer appliances sector. Venu, thanks very much. Great to have you with us here on the show. If you can first up lay down, what you've done here in terms of the research. What are you looking at? Which are the end markets we are focusing on when we talk about the consumer appliances space and the key findings?
Yes, Prashant. So, in fact, what we tried doing here in this black book is trying to give an identity to this sector, especially because you know that when we talk about consumer appliances, this is not one end market. There are numerous end markets, starting from a simple product like cable wire to complex products like air conditioners and refrigerators. So the identity to the sector is what we tried creating in this black book. But interestingly, each of these end markets, which are more than 20 product categories, have different sort of demand traits, tend to be quite volatile when we look at near-term factors, etc. But if you look at the overall size of the market at this juncture is $20 billion. Now that's a fairly small size, but then over the last decade, we have seen this market grow at more than 15% CAGR. So from a very simple top-down perspective, when we look at this market, what we are saying is that, look, over the next 20 years, if we are looking at a 9 to 10% growth for this market, this is essentially heading into a $100 billion per annum opportunity over a 20-year period, and something like a $50 billion over the next 10 years. So the market is going to scale up, and that is what is going to provide opportunities for vendors. But at the same time, the argument one could make is, are there any examples from a global perspective on similar markets which have seen extended periods of growth rates? So when we look at China, where we've done extensive work, especially in this black book, where we highlight that, look, the China market as it stands today is more than 8 to 10 times that of India. And more importantly, we have seen almost 10 to 15 years of 20% plus growth for a lot of companies in that space. There are more than 5 companies with $10 billion revenues at this juncture, while the largest, probably the Indian company, which is an aggregator of these 3 end markets, which is electrical, small appliance and white goods, is Havells just about $1 to $1.2 billion revenue sort of a metric. Now, what we're saying is that, look, if we sort of triangulate the sort of top-down thought process that we have and look at some interesting metrics over the next 10 years, which could be the key things which could drive the sector. One of them being essentially the fact that if you look at affordability versus penetration curve, this is probably more pertinent for white good products where penetration is low in India. They tend to follow a very nice pattern if you do a global comparison. So our view is that over the next 5 to 6 years, you will reach tipping points for some of these end markets, which could be air conditioners, refrigerators, etc., where you would see lift off in growth rates. And the second part being that, look, in the last couple of years, we've seen housing market being weak. And that's an important underlying driver for quite a few of these products. So over the next 5 to 6 years, we think there would be a recovery in housing market again, which essentially again lifts or potentially provides a cyclical lift to this sector. So the thought process hence, when it comes to the overall market sizing perspective, is that this is a market which is going to provide opportunities for growth for the Indian vendors.
Okay, fair enough. An interesting comparison, right? I mean, 4 to 6 consumer appliance companies in China with revenues of in excess of $8 to $10 billion. The largest one here is 1/10 the size of those companies here, which is Havells you referred to. But there are many listed here, right? I mean, there are one product companies, single product companies, 2 product companies that are big aggregators. What should one do to play this opportunity? I mean, what should long-term investors do? Buy a bunch of them, sit on them? Or you think it's already time to kind of sort of sift through, try and pick out the winners? How would you look at it?
That's an interesting question because it happens in every end market. And I'm sure you would have seen that in the IT boom days to construction boom in the mid-2000s, as well as power sector, for example. So whenever you smell an opportunity, when you see a sector scaling up, and you see a leader like Havells having delivered over the past decade, and when people see them doing well, there is a host of companies which try following similar strategies. Now, everybody wants to be a multi-product category company. They want to sort of launch products into adjacent end markets, etc. But the interesting thing is that in the initial phase, when 15, 20 companies try doing that, some of them tend to get growth because they tend to displace the so-called unorganized players in the market, right? And plus, they have their existing product base, which is their core revenue stream. But then what happens essentially is after this initial scale up, we think that if you take a 5-year plus or a 10-year view, this is not essentially a market growing at 30-35% growth rate per year. So what it essentially means that while there would be room for a few players to sort of emerge and sustainably scale up, and not all of them. So interestingly, what it essentially means is that when you look at sifting or trying to identify companies which could be long-term winners, you end up taking some qualitative bets. Now what we do here is that we say that, look, what we need to understand is what are the key variables which essentially would make me pick a company. In this market, we think the brand is extremely important, and it is about wide reach of the brand, right? And more so, distribution presence, have to be a pan-India product. The understanding of the product for the company is very important, and more importantly, the managerial bandwidth, their capability, and their track record. So when we sort of put all these soft filters across more than 20 companies that we sort of track in this sector, we came up with 3 names, which is Havells, Crompton, and Voltas, which we thought in individual markets, because Crompton is a consumer electricals company, Voltas is a white goods company, and Havells sort of straddles all 3 end markets, including small appliances. Our view was that, look, these 3 have the best chance of sustainably scaling up. It does not mean that some of the tier 2 or tier 3 vendors, as I say today, do not have a potential for scale up. But at this juncture, we feel that these 3 are the ones which we should essentially look for a long-term perspective, and maybe a couple of years down the line filter down to 1 or 2. So that's a way I would approach it. But if you're taking a long-term call, it's best to identify and do work on these 3 names.
Fair, Venugopal, got your point. And just a quick question: what are the risks to those projections? I mean, I don't know. Could it be Chinese competition? Could it be internally India market competition, where then it starts impacting pricing at a level? Any risks to that outlook?
See, if pairing the so-called near-term demand volatility and risks which keeps happening from time to time, I think the interesting thing you raise about is Chinese competition and competition in general. See, normally what we have seen, these end markets tend to be fairly fine in terms of competitive activity, which means that you don't really see any disruptive competition or disruptive pricing paradigms entering this market. And this market is very different from, let's say, a mobile phone or a consumer electronics market, where the Chinese vendors have entered. They now command 50% market share in the mobile market, and we do expect them to succeed in the television market too. But there, the entire paradigm is different, because those are products with short product life cycles, and the value equation that they provide there, with product prices essentially 50% of that of a leading brand and offering you a similar value, there is a very different argument there. But when we look at these end markets, essentially consumer electrical end markets, this is primarily dominated by Indian vendors. You don't really see any disruptive competitor enter this sort of a space, except for lighting market, where pricing stability has not happened as yet, and that's the reason why you tend to see some competition there. But when it comes to other markets like white goods, we don't really see much of the Chinese vendors essentially creating a dent at this juncture, because all our consumer surveys that we tend to do in that part of the market, the feedback we get is that there is a willingness to pay a premium of 10 to 15% in terms of pricing, because they want to hold the product for at least 8-10 years. So replacement cycles are fairly long there. So that's a reason why you don't tend to see any disruption happen in this end market, even though I would say that my worry or risk probably will start when this market scales up significantly a decade later, where it would probably be a stage where you tend to see competitive activity accelerate.